Good evening, ladies and gentlemen. Today is the 27th of September, and today there was a tremendous amount of green. Once again, we were looking to gap up over 100 points, and my idea was that if we gap up way above Friday's high, then I would not be taking a trade. But we gapped up more or less in the range, which is why I took a trade with very tight risk management criteria, and just to benefit from the cooling off in the weekly options. We had a steady IV rise in later dated options, and but however weekly options invariably cannot hold too much value considering that they have to expire this week. So I had a very good risk management. I think my plan for the day went more or less as good as it can, and meanwhile I had a position on Reliance which gave up a little bit of the gains due to the kind of short covering up move, but it was balanced and hedged by my portfolio, so that worked out all right. And I've closed all of my weekly trades for this monthly expiry with stock options and rolled them forward to the next month. So in this video, once again, this will be very similar to Friday. It is about how in a rising IV environment, you can tend to find certain trades with very good risk to reward. And today, once again, you'll find that this position never really put me into much of a negative, but potentially had a lot to give. And at one point when I felt that the potential risk on the position was much higher than what I could possibly gain, that's when I cut it out. So I cut out a little bit, like about an hour and a half before market close. So thank you so much for watching, and I will catch you tomorrow. Take care. Bye.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 9:38. So two things. I didn't want to trade the gap up if we were going to gap up over like 30-40 points above the high of Friday. Gapped up within the range, so I took a very small trade, which is going to be very straightforward. The 900 points triangle. My idea is I'm at entry. I was trailing a stop loss of 3 points. I have a target of potentially 5 points I can gain on this position. I've kept my sizing low, and the idea is once, let us say I'm at 5 points in the green, I'll be trailing a stop loss of 2 points beyond that, and that's about it. My positional trades are doing all right. My HDFC Bank call has now gone in the money. It's covered against shares, so it's fine. Reliance as well is breaching the point of my max profit range on the upside, so that is a concern. I'll just go over how that is looking. So HDFC fine at the money. Actually, your call going at the money or slightly in the money is the best case scenario for a covered call. It means that you can get an amazing roll forward to the next month. And I'll be rolling forward both the HDFC and HDFC Bank as well as Larsen position today towards the close, provided we close in the green towards the highs of the day. You generally want to roll your covered call positions on a day when the market is green. So this Larsen position, which was initially losing me quite a bit, is now not losing me much, and my shares have benefited immensely. So it is once again best case outcome. Reliance, the issue is above 2500, the rate at which my position will start to decline in case there's a further up move on Reliance is quite high. What I'll be doing now is towards the close, once again this as well, I will see whether to book or whether to carry for another day or two, and depending on where Reliance closes. There's an immense amount of strength in Reliance at the open. A lot of strength in Reliance, firmly pushed above 2500. Now this battle is not done yet. The 2500, there are a lot of call shots, so it will be interesting to see if 2500 gets defended by the close, or if there is some kind of short covering up move. If there is some kind of short covering up move, what I'm going to end up doing is shorting more in the money puts at 2520, 2540 to sort of deal with the negative delta. Banks as well opened very strong. IT is a little bit weak, but apart from that, auto as well looking pretty good today. So that being the case, what is the plan with this trade? As of now, I'm trailing a stop loss on this position of about 3 points, and as the day goes on, that trailing stop loss will reduce considerably in size. Now potentially, I think easily I can see a 5-point fall off in this position by the close if market holds range. In fact, probably more than that. And yeah, we'll keep you posted. I'll not be doing any adjustments to this trade. In a rising VIX environment, don't do adjustments. It's better to sort of say, okay, this is my trade, this is my exit criteria, this is my trailing stop loss. Also, just a note, my voice quality might not be great because I'm locked out of my cabin and I'm hijacking my wife's cabin for today. So in case the voice is a little iffy, apologies. Okay, the time is 10:20. Basically, what has happened is after the gap up, it did not sustain, and we have completely given up most of the gains. And it's basically Infi and TCS that are taking the biggest brunt of the hit at this point of time. Now, since there's absolutely no premium, my call is trading for 8 rupees. My put was trading for 23, so close to 3 times the premium. And given that it would not make sense at that point, I'm just short naked put. I have moved down my call by 100 points, centering around 17,850, and still the same trailing stop loss exit holds. As of now, I'm down about 1 point. If I lose 2 points from here, that will be the end of the day, and it will be a small day. Meanwhile, the down move is definitely benefiting the fact that Reliance has come below 2,500, so that is benefiting my position. And from an overall mark-to-market perspective, that is doing all right for me. So we'll keep you posted. The time is 10:22, and as of now, looks like so far we are very much inside the range of Friday. Okay, the 3 point stop loss is just about being tested as we make head lower. My idea is that this particular support zone from here to 17,800, right? So this particular zone should hold, right? So even if we dip, we're most likely to bounce from here. The 3 point SL just about, okay, not so much anymore. Looking to get hit, leading to an IV spike from the put side into the down move, always into a gap up. If you have a runoff on the downside, invariably the puts that have given up all the value in the morning will start to gain them back. So yeah, as of now, position is down 2 points. My idea is very simple. We break here. If we break here, we break this particular support here and head here. That is my exit. And at that point, I would think I would be in exactly a 3 point loss. So that should be a good enough point to get out of this position. Okay, so we're steady trending down, and even now we continue to hold at the low levels. But what I'm expecting is that 17,800 most likely to bounce off of. Now, at no point was my position more than in 55,000 loss, which is why I'm still holding it. And I think it would be prudent to hold this position until there's a clear break of 17,800. I think if I were to exit just here, because we didn't really test 17,800, just held a couple of points above 17,800 and have seen buying from there. And Bank Nifty as well, 38,000 after this huge gap up and then getting sold into by 150 points. I'm expected potentially a limited downside. Also, there has been a steady rising in options IV as well. So that's exactly why I'm structuring the trade this way, where I have such a wide range that it lets me sit in this trade for longer, and also by keeping my position size lower, that also ensures that I don't get pushed out very quickly or have to make very aggressive adjustments into a rising VIX environment. So all this being the case, we're not yet at the halfway point, but as of now, been an immensely weak market after having a huge gap up, completely sold into, and a lot of the weakness coming from IT and Bank Nifty after the initial strength is not really showing up. So yeah, after dipping here to where my exit criteria is, we have now seen some amount of buying coming in. Yeah, if I was much closer, if I was trading a 500 point or a 400 point strangle in an environment where you're seeing a steady rise in IV, it becomes just terribly difficult to manage, especially given that today is a Monday. So to keep you posted, the time is 11:46, and as of now, the position is under a point in the negative. If we head back to 17,850, if we make like another 30 point up move from here, that will lead to an immense fall off in put side premiums, and that would benefit my position immensely. But at the same time, if we break 17,800, that is the time to run for cover. Also, if you notice, the call option really hasn't given up much since I rolled it down. I rolled it down from when we were trading above 17,850, 15.4, and from then to now really hasn't given up much. So it's not like people are suddenly charging much lower for call options, because we're in a market where every day it's become the normal to gap up 100 points. Okay, so far more or less exactly according to plan. We dipped till 17,800, that got in all the demand, and we are now getting bought. Yeah, Bank Nifty did not even dip till 38,000, straight back up, and that has completely crashed these put options, as one would imagine. So yeah, very quickly everything in gain given up, and more or less we are approaching that halfway point on the day, and my idea will be to once this is in a 5-point profit, if it ever gets there, from there I will trail a 2-point SL. Now that this particular buying has happened, I think this is the bottom of the day. I don't think that we will be testing here again. We'll keep you posted. Time is 12 o'clock, and so far more or less according to plan. Okay, so something that I would not have expected is that once this dip got bought, that the 18200 call actually expanded to the extent that it did. Ideally, what I would have expected is once the dip got bought, this put option gave up a lot of value, and this call option not really gained so much, because actually it is now trading higher than what it was trading at when previously Nifty was here at this level. Let me just show you. So when we were here, what was the time? 10:55. 10:55 candle. Yeah, it's trading at 15 something, and like a certain amount of time has passed, and into the up move now, the call is actually trading higher than what I would expect it to. And once again, India VIX continues to rise. Later dated options continue to put on a lot of premium, and the IV in shorter dated options also is quite high and continues to keep rising through the day. So yeah, something that went against my expectation. But regardless, I think for now the range is fine, and I still feel that by the close of today, there could be a good fall off. Even from here, there is easily about 5 points plus that I can capture on this position. So for now, we'll keep it exactly as is. Okay, so we continue to hold about above 17,850, but there's a little bit of strength coming from Reliance now, taking out this particular high here. And now this can start to be a problem for me, because my Reliance position is going to start bleeding, right? If you remember, it started off with this 2300 call, but anyway, this position is going to bleed. I'm going to have a headache dealing with that. So what I'll be doing is today, I will be squaring off my Reliance position at the close, or if we test another 6 points from here. So 2520, which is the next strike. Once this put option goes at the money, that is when I will be squaring off the entire Reliance position, and I will be selling quite close by 2600 call option of October. So I will be just booking that position, and considering that this kind of a move has happened on Reliance, I should just be happy that I managed to hold on to my shares and also book a profit on the F&O position. So I'll be rolling it forward. Same thing with the remainder of them as well. I'll be getting rid of all of my stock options for this month, expiring this month, and pushing it forward to the next month. More or less how it has worked out is that my intraday trade is balancing leg for leg the Reliance up move, and the issue will really be if there's some kind of a continuation breakout situation on Reliance. Now that would be a problem, and yeah, we'll keep you posted. It's fine though. I mean, my saving grace is that my shares have benefited immensely into this up move. If you really think about it, I entered this position when Reliance was at 2160 by selling this call option. And from then till now, it's gone from 20 to 214, giving me a loss of 2 lakhs. So had I not managed it, I would have ended up booking a loss on this position, but I'm booking a profit, and that is good enough. So I will take that and I'll roll it forward. Same thing with Larsen as well. I'm going to book this. My shares have benefited immensely into the overall up move, and despite Larsen being down today, the 1900 call option that I want to sell has lost only about 2 points. There's a steady IV spike across all monthly options for October, so I'm going to use that as an opportunity to roll forward everything. ITC as well. I want to sell the 260 call option for October, and that is trading at a good 6.5. For this to be at that, ITC has to make like an 8-9% up move at this point, at which point this will be at the money. So I'll have a lot of gain in my shares before I have to be concerned about managing the call option. All that being the case, this is the plan right now. As of now, if Reliance does head to 2520, then I will be immediately rolling it forward. If not, I'll wait for the end of the day to roll it forward. I'll keep you posted. Time is 12:50. Okay, considerable volume in Reliance into this up move, and basically my stop loss is just now 3 points away, and I have my exit order ready on Reliance. So I will basically be exiting once that particular strike is hit of 25.20, and at the same time I will be selling this 1200 quantity of the 2600 call option of October on Reliance. We'll keep you posted. As of now, the intraday trade is looking fine. The Reliance trade is just more or less at the point where it would hit the stop loss, 2 points away. Okay, I had to step away for a second, and in that period, Reliance big up move, and no point in holding this Reliance trade anymore. So I will be taking the exit on this Reliance position. It has done as good as it can for me. I will now take the exit on this, and at the same time, once I exit this, I will be entering a new trade on it. I will go. This is what happens into short covering. You have to invariably pay slippage, and there's nothing you can do about it. So that Reliance position is done and dusted with. Now I just have to sell this. So basically, let's take a look. So 175. All said and done, booked about 40,000 profit on the Reliance position and got to hold on to my shares and have rolled it forward. So that is the end of that. After it began over here by selling this call for 20, squaring it off at 220, 11 times the price, and but finally booking a profit on the position. So that has worked out fine. Also, one more thing, now that I've exited this position, this will show mark to market loss, because obviously I would have paid slippage, yada yada, so on and so forth, in actually exiting the position. So that I will not consider. My intraday trade continues to run for now. It is continuing to do well. There's about 30 points in this particular position, and if at any point it expands to 32, I will be squaring it off, and that will be the end of the day. Meanwhile, I will wait till the end of the day to exit Larsen and ITC and HDFC. We'll keep you posted. Okay, so some decent cooling off in weekly options IV, and currently my intraday position is giving me a good 1,05,000 profit. This will show, this doesn't really mean anything. This is just slippage, and also rubbing in my face that I had to pay the bid-ask difference in order to cut my position. If you've followed me for a while, I think in December and Jan, you would have seen some of my trades. I would end up sometimes paying upwards of 50,000 in slippage just to exit a particular position in stock options, because there tends to be quite a large bid-ask difference at times. And yeah, you really can't do too much about it, if especially you're doing it at a point where everybody is covering their shorts either on puts or calls. You are going to get a bad deal, and that is part of doing business. As of now, nothing to do as such on the open positions that I have. All that matters is that I'm trading a stop loss now on this particular position. It's trading at 30. I don't expect it to go to 32, but if it goes to 32, I will be cutting out of my position. The point which can lead to that kind of an expansion is if we break 17,900 on the upside, then this call might see a little bit of expansion, which won't be compensated by the put. And that is the only condition in which I will be exiting the intraday trade. So about 2 points. This has to go to 32. Until then, I think otherwise this should be all right to hold for the next 2 hours, and potentially can see a further cooling off in this. People who have shorted December options will be cursing themselves because, I mean, there has been over the past 2 weeks a steady rise in December option premiums, and yeah, that would not have worked so well today as well. Both the put option and the call option are up by quite a bit. Okay, so the spread is now trading for slightly under 30, and I'm going to be taking my exit with still 1 hour 40 minutes to go in the market. I will go over exactly why I'm doing that. Okay, so Nifty positions closed, and between the Nifty positions, about 1,05,000 of profit booked, and I'll tell you why I did that. So we had a gap up got sold into, took support around here, didn't really hold when the pullback was attempted. These 3 candles broke down, took support at 17,800. From there, stiff up move of 100 points. Now Reliance showing some amount of strength, little bit of short covering already happened. Now, as far as the risk reward is concerned, my call is 300 points away. My put was rather 400 points away. And in case there's a continued up move, so far this call really hasn't been covered. If you've seen the last 100 points move of Nifty that has happened from 1135 to now, this particular call option from 1135 to now, obviously it's super OTM, so you can't really expect, hasn't really seen any burst of short covering. And it hasn't seen some kind of a burst of short covering. But that is totally possible the moment we break 17900 on the upside, that people once again realize. And for example, if towards the end of the day we manage to move all the way up here, just a 30-40 point move and close at the day's high, the OTM calls are going to blow up. So I don't want to have to deal with that, and it just makes sense from this point to just exit out of the entire position and book the profit. So that's one thing. The other thing is I have ICICI Bank shares, which I have not sold a cover on for a while. I was a little bit bullish at that time. Now I have sold a cover on them at about 800 in October series for 8.2. So this is another position that I have just added over here. Now, a lot of people will think it is such a strong up market. Why are you selling call options again and again every month, getting burnt on them? Well, technically, I'm not getting burnt on them because I'm not booking losses on the positions overall. That's because market is definitely stretched, and this profit, whatever is there in holdings, these shares were transferred to this account in April. So from April itself, if you consider from then, made a tremendous up move. I have no intention of booking profit on any of my shares. So instead, what I'll be doing is keep selling call options. So in case there's a down move at some point, I at least have some call option credit that I can collect. Also, I think it kind of makes sense that when I entered hedge trades like that, it allows me to first profit on my trade before I have to do any positional management. So that is one way of doing a trade. Now I'll be squaring off this Larsen position as well and rolling it forward. So I'll just get around to doing that. I would rather do it at a point when there is really no volatility in the market, when we're holding. So I would do it now. Okay, that's done. And HDFC will be more or less at cost. Okay, so that's about it. And okay, so that's about it. And so basically the day's summary is on the intraday position booked about 1.4, and on the remainder about 15,000 of booked profit. And yeah, so about 120 booked. Thank you so much for watching. I think today was a day where once again in a high IV environment was able to sort of benefit from the fact that super OTM premiums are super high, and you can take that kind of a trade at a very good risk to reward. And yeah, more or less went according to plan. The line shooting up part was really not part of the plan, but obviously it means that that additional 20,000 that I had to give up on my Reliance position because of exiting it would have been gained by my Reliance shares. So it'll reflect here. And it also means that I got a better price on entering this 2600 call short for the next month. So all that being said, thank you so much for watching. I hope you had a good trading day. I hope you have had some amazing long positions in this market, which continues to look extremely strong with little to no sign of pulling back at any point of time. Thank you for watching. Have a great day. I'll catch you tomorrow. Bye-bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.